Morning, everyone. Let's talk about long promised Form T776, your rental schedule. This is for your personal income taxes. It's going to be a step-by-step guide with, CRA instructions. I did promise this a while ago with the tariffs and everything. We got a little bit sidetracked. So what are we going to talk about today? We're going to talk about the form. I'm going to introduce you to it, the rental schedule. Required information that you're going to need. Then we're going to go through step by step how to complete it, some common errors, how to avoid them, and consulting with CRA, the instruction guide, the T776, and resources. I've included the links, as well as consult a professional, chartered professional accountant with a link there. Final steps for filing your forms. Okay, and remember your Form T776 for personal tax purposes integrated with your tax software. So if you're using online software and that, you're going to have to make sure you have self-employment or business package to be able to complete this schedule and file, and they'll probably charge you for that, okay? So if you like the presentation, you find it useful, educational, please like and subscribe on my YouTube channel. This is for free education for everybody. I enjoy teaching. I enjoy sharing information. If there's anything else you want to see, please email me. Introduction to the form T776. So this is what it looks like. Okay, you can download it off the Canada Revenue website. It is now 6 pages long. It's gone from 3 to 6, all the changes. All right, you can use this as your guideline for keeping your records and keep a folder or set things up electronically up in paperless forever. But this is your best guide as to how you should organize your rental revenues and expenses for tax purposes. The banks may want something else if you are going to be using your financial statements for mortgages and that sort of thing. This would be the second page with the expenses, what it's going to look like. And we have to know the difference between what a current or capital expense is. Current expenses are like operating expenses. It's an expense you used that didn't extend the life of the property. You're just putting it back into its natural state. Now, if you're going to do a huge, project such as, say you want to put an addition of a room on, you're actually improving it beyond its original condition. You're adding value to it and the life, and it would be considered a capital expense. And these are great definitions. The criteria: does the expense provide a lasting benefit? A capital expense generally gives a lasting benefit or advantage. For example, the cost of putting vinyl siding on the exterior walls of a wooden house would be considered a capital expenditure. Okay, the current expenditure is one that usually recurs after a short period. For example, painting, the exterior of a wooden house would be considered a current expense. And they have different questions here that you can review and see if they apply to you. This is the form you're going to use for capital, not current expenses. Okay, this is on page 15 of the 2024 T776 Rental Guide. Now, just to note, make sure you're using the right forms for the right year because they change every year and you don't want any surprises. You can tell that by the bottom left-hand corner, it says T776E24, that's year 2024, all right? If you have to go back and do other years, you need the forms for those years. Who needs to file? Anybody that basically has a rental property, landlords. Um, if you have an Airbnb, if you have foreign properties that you rent out partially for the year and you live in partially for the year. Just an interesting note for my farmers and ranchers out there, crop sharing. CRA considers crop sharing to be rental income and not farming income. And that's important to know. What if you don't file? Well, you're going to have a penalty. Okay, if you knowingly or under circumstances Do not file. In essence, you're making a false statement or omission. You may get caught under the anti-avoidance rules, and you could pay a lot. The minimum, would be 100 or 50% of the understated tax or overstated credits, or both, depending on the situation. Was it intentional? Was it not? So I know a lot of people might think, oh, well, I'm just renting it to cover the costs and they offset. It doesn't matter. If you're just renting to cover the costs, you have to fill out the schedule and file it, or you could be offside and facing those penalties. Okay, so a definition of rental income, what is it? Payments received for property usage, right? So you could be charging people rent. Maybe you have to pay extra for parking fees because they decide they want a parking spot, or you have one and you have to pay extra for it. You're going to charge that back. Cutting keys, are utilities included or not? Okay, so you really have to understand what qualifies as rental income and what you have to report. And foreign properties in Canada, a reminder, we're required to report on our worldwide income. So you will have to include a schedule 776 for your rental property if you're renting it out part of the year in a foreign country. And just a note, you may have to report that income in that foreign property as well and file tax returns there. It's really important. Talk to your tax professional and look at that tax treaty. So let's gather the required information. Okay, comprehensive income tracking. So you might have a ledger. Maybe you do it manually. I haven't done paper for so many years. I do everything electronically. You could use Excel. You could use QuickBooks, fairly cost reasonable. There's other softwares out there, I'm sure, but you want to keep track. Okay, you want to be accurate. You want to take a look at your annual income, make sure it's agreeing to those rental contracts you have, and reconciling, because if you do get requests from Canada Revenue Agency to review and they're asking for the supporting documentation, if it doesn't agree, you have things to explain. And generally, they dig deeper to make sure they're comfortable that what you're reporting is accurate. Diverse income sources from all rental properties, whether you're charging rental fees, parking, fees, service charges, break it out, include barter transactions. You have a tenant that receives reduced rent for property maintenance for you. Maybe they maybe they plow snow, or maybe they mow the lawn for you and water the grass. Okay, you give them a discounted rent. While you're required to record the full amount of the rent with this inducement for that tenant, then you would record on the other side the expense that brings the rent down to the net that you've received. Okay, so you're required to record the gross and then the expense on the other side to bring it to what you actually received. And make sure it's written in your contract, okay? Allowable expenses. Well, if you're using a property management company, of course, property management fees. I know a lot of people, ski hills, condo, they just use a property company, services company, management services. It's just easier. Repairs and maintenance, it's pretty generic. You'll see on the form more detailed. Repairs and maintenance, including insurance, property taxes, advertising, utilities, travel costs, as per slide 5. We'll take a look at that. Mortgage interest, you've got to prove that the mortgage is attached to that rental property. Allowable expenses, reducing overall taxable income. Be careful with leveraging. So you've paid off your principal residence and you get a mortgage on that for the rental property. Make sure everything is clearly documented, what the business portion is. Do not commingle your business or your self-employment or your rental expenses with personal where you don't have to. It just makes life a lot easier. Okay, the importance of accurate records, it's crucial for knowing exactly what your income and expenses are and ensuring compliance with your tax requirements for Canada Revenue Agency. You keep your receipts, invoices, your contracts, your rental contracts, financial statements, related to the rental income, for effective management. What if you have to report to the bank your cash flows? You want them to see exactly. You also want them to see that you're taking care of the property, those sorts of things. Tax preparation, proper documents during the tax year will, once again, simplify the process. Now, and it'll help you avoid audits or penalties. So when Canada Revenue Agency asks you for information, you can just give it to them. Number it, keep an index, keep it organized. It makes your life easier. You're making their life easier. And if you have hired a professional to do the taxes, you've done all the legwork, your fees will be less for tax preparation. So here's step by step. Here's what we're going to do now. Filling out part one, your identification. So your name, Joe Smith, your social insurance number, your address, postal code. Be accurate, fill it out, or you may get a rejection, a diagnostic that rejects it. You have to have your social insurance number again because this form is integrated with the tax software that you're using. So if you're using TurboTax or whoever you use out there, I'm not advocating for any software company. You can check out the Canada Revenue guidelines for who's got encrypted pre-approved screen software. All right. The more it's complete, the less diagnosis you get, it'll get e-filed a lot quicker. All right. A social insurance number is a must. The fiscal year, because this is personal income tax, proprietor, it's from January 1st to December 31st. Was it your final year of operation? Yes or no? In this case, no for illustration purposes. Who prepared this form? Okay, was it yourself or was it a CPA firm? You know, make sure you fill that in. Are you a partner or not? That's where you're going to label that information. So if you had a co-partner, you put the name in here and the percentage of ownership, and then the form would automatically calculate for you what's your portion, what's their portion. Okay, filling out part two, here's an example of the income. So in this case, we've got two locations of rental properties. The first property has 2 units, the second property has 1 unit. Um, Gross rents for short-term rentals, here they are. You know, I'm estimating in my mind the foreign property is for 6 months sort of thing. Keep track and write down in your records and make sure the rental agreements show Facebook ads, whatever you're using. Here's the gross rents for the units. So your total income, 23,200 before other income. Say you charged a documentation fee because you're charged. Maybe it's property management fee because you had a lawyer look at it. Maybe, you know, sharecropping, whatever. You add that in there for total revenue, 24,400. And then here's the expenses. This is their schedule. That's why I say it's best if you go to Canada Revenue Agency, take a look at their schedule and break your categories into this. It'll make your life a lot easier when you're getting organized and ready to do your taxes. So advertising, insurance, interest and bank charge to office expense, legal fees, accounting fees. If you had a property management company maybe, or if you had somebody living in the unit and managing it and renting out rooms, uh, repairs and maintenance. If you were paying someone as an employee, property taxes, utilities, travel, your allowed vehicle expenses or travel costs under certain circumstances. And then we want to just take a quick look at as well capital versus current costs. All right. So here we have it. I'm making an assumption that we had 24,000 of capital costs. Say we bought all this furniture. I've categorized it as Class 8 under the TBOR 036 general guideline provided by Written Canada. It's well written. And so I've taken out the 50% personal before putting it up here. Now I'm making the assumption that this is carrying forward from the prior year. All right. And then we get to claim an extra 2,400 deduction against our income. We're not allowed to claim it all because it's an asset, it's adding life, it's brand new furniture, it's going to last a while. So in essence, we're matching the revenues to the expenses, we are complying with the Canada Revenue Guidelines. So 19,920 after we subtracted those operating expenses um, from before, and then we get to claim 2,400 deduction off of our capital cost allowance, so our net rental income, 17,520, right? Common errors and how to avoid them. Misreporting income. Okay, again, just check the detail. Make sure that what's on the rental contract agrees to what's going into your bank accounts. And if not, reconcile it and explain the differences. Okay, it is very important that is accurate because you can be charged penalties. Incorrectly claiming expenses, read the guide. The T776 guide is very well detailed, easy to read, easy to follow. I have a rule of 3 reads. So I read it, I do a cursory overview, I pull out the forms, take a look at it, let it digest. I gather all my receipts, everything, and make a list of what's missing. Then I read it again and identify, oh, maybe I'm missing more. And then I do the third read. I gather what I believe I'm missing. I do the third read and I summarize everything. And if I have any questions, I would write them down so that I can either contact Revenue Canada for answers or my tax professional. Omitting required information. So if you don't put in your social insurance number, you're going to get rejected. If you don't put in the address, well, that creates a problem. It's incomplete because these go onto King schedules. They go from the tax software, it interfaces with Revenue Canada. The numbers like the 8561 and everything on the expense and revenue columns, they directly interface with the King schedule, and Revenue Canada goes through a matching process. And if it's not completed properly or if there's significant changes, maybe you coded something different last year than this year, it's really important that it's accurate and that you're consistent from year to year. Again, we want to reduce the risk of audits. We don't want compliance issues and penalties. We want to make sure it's squeaky clean so that if it does come to a review, Revenue Canada can just zip through it. Now, in the event you have questions, say you're new at this and you think, well, I think I can handle this. I want to try it myself, or I want to understand as much as possible. You can consult Revenue Canada. They have the toll-free number there. Try to do it before tax season because they get very busy. It's easier if you do it, throughout the year as issues arise. Okay, I've included in here the links to Revenue Canada agency websites for the forms 776 and the guide. I've also put the link in here for what's changed for the year and the importance of compliance. Accurate reporting, there's the T776. It tells you step by step how to complete it. Remember 3 reads. 1, the overview to understand and print out the form to give yourself time to digest everything. Then gather slowly. Don't, let it all overwhelm you. Don't get panicked. Just slowly start putting things together. And then do the second read. Have you got everything? Is it added correctly? Am I missing anything? Make a list of what's missing, get everything together, and do your final read. And if there's any questions you have because you're not sure, bring that documentation, consult with either CRA or your tax specialist. It talks about the complex rental guidance, the REP, or go to a CPA. CPAs are required to keep their training and their professional development up to date. They watch the annual budgets, both provincially, federally. They see what the changes are, what's received royal assent, and what's actually going to change and affect you. And they'll know what the upcoming requirements are. And they'll, in case you've missed anything, they'll be able to catch it for you. This is what they do. So final steps, review that return. Okay, make sure it's accurate if you're filing your own through whatever software you've chosen. If the numbers don't match, go back and check it again. Make sure the numbers agree to what your numbers are. You submit the form. How you do that, again, as an individual, it's embedded into your T1, your personal income tax return form, and you file it all together. And as long as it's completed accurately in that, the e-file will go through. If there's errors, you'll get what's called a diagnostic sheet, and you're going to have to correct those. You have to keep your records for future reference. I recommend 10 years. The government on the website says 7 years. They usually don't audit after 3. I have just found in the course of my career that Revenue Canada has, not often, once that I know of in my career, opened up files for 10 years. And they usually don't do this unless there's a good reason to do this. Maybe misrepresentation, fraud, significant errors, that sort of thing. All right. So I recommend keeping them up to 10 years. Conclusion, any comments, requests, please contact me at shelleyrbevs@outlook. Again, please like and subscribe and share if this was helpful. And let me know any other topics that you would like. Have a great day.